Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, following Thursday's highly anticipated US CPI release, the Australian dollar strengthened further and briefly spiked towards a target of 68 cents. However, the bears regained control, leading to a partial price retreat. Nevertheless, the dollar index, which measures the greenback strength against a basket of 6 major currencies, weakened further to 104.45 due to increasing expectations that the US Federal Reserve could soon cut its benchmark rate following a cooling US CPI report. The latest June US Consumer Price Index, or the CPI report, showed an unexpected 0.1% month-on-month decline, following a report by the US Bureau of Labor Statistics, marking the first decrease since December 2022. The core CPI, which excludes food and energy prices, increased by 0.1% month-on-month, its smallest rise since August 2021. Forecasts had predicted a 0.1% increase in the headline CPI and a 0.2% increase in the core CPI for the month. The report indicated a broad cooling of the prices in the second quarter following below expectations. This has heightened the likelihood of a rate cut this month, although the majority of the market expects a rate cut in September. Traders are now waiting for the Friday's release of the wholesale inflation number, or the PPI, which could give us further indication on how the Fed may play out this month's potential rate cut or September. So turning to the technicals, we can see we've got a strong shooting star, but nevertheless, the technicals are still relatively strong. So therefore, I anticipate further upside challenges that could clear the 68-cent mark and look on towards 68.5 as a potential target, with any pullback looking around 67.35 to around 66.80 as a short-term base. Along with that, traders should continue to monitor signals closely and adjust their risk management accordingly, just in case we get further whipsaw price action. As we can see from the euro, this also was very volatile overnight as the market stabs towards the call level to the top side of 109. I still anticipate further strength, but there is a bit of bearish divergence, so no doubt there might be a little bit of profit taking. But overall, if the dollar does sink further towards 104, then we could clear 109 and look on towards 109.5. Any pullback sees support around 108.20 and potentially a short-term base around 107.80. Once again, we see a very whipsaw price action. Last was seen back in April, and now overnight the market is very strong to the downside as speculation that the Bank of Japan may have intervened. However, the Japanese diplomat cited in a news report that he was not able to comment on whether authorities had intervened or not. Nevertheless, from the technical aspect, we were close to the 161 rejection area, and from the break of 160 now looks further to this trend line, which hasn't completely broken yet around 158. But I do anticipate, due to the heavy technicals, a marking of this break that is at 158 figure. Then it would expose the next target at 156.4060. Any upside attempts is likely to struggle, and along with that, it is important to monitor signals and adjust your risk management accordingly due to the current whipsaw price action and high volatility. Turning to sterling, it was a star performer as the market reaches its target of 129 and now potentially could see some profit taking coming back into play and look for a retreat to 128.5 or maybe down to 127.70. With that said, the trend is still very strong, so therefore we could see many rejections to this sell-off and overall could see another challenge towards that 129.35 to 70 area. So as the US dollar declined, we saw a stellar performance in gold and rallies on, and now close back to its highs that was seen back here in May around 2,450. I do like the way this pattern's performing, but there is a bit of bearish divergence here, so no doubt the market may actually reach its target around 2,450, but may not sustain like previously, and therefore could see a pullback. If we do see a pullback, I view the support around 2,388.90, but overall, with the trend holding firmly, could see another uptest. Wrapping up with oil, the market still remains somewhat steady, given the fact that the broader market was very whipsawed. Nevertheless, the resistance holding around 82.20.30, and with a mixed technical background, I feel that there could be another down test. We do need to see a break of 80.40.60 to get the bearish case down towards the region of $78. But wait for the break just in case we see a further round of up tests. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.